Good evening, all. We're going to start shortly. All right. So, good evening, everyone. This is Ajat Mishra from Religare Research, and welcome to our weekly webinar of Week Ahead with Religare Technicals. So, during this webinar, we talk about markets, how the markets performed this week. To start with, we talk about that, what all sectors uh, which did well, and where we saw profit taking, and also how the Nifty 50 stocks performed, the top five gainers, losers, followed by our view on indices, both Nifty and the banking index, followed by the some of the stocks which looks positive or negative to us, and we'll conclude the presentation with the quick feedback poll, and then we can start the Q&A session. So you have this Q&A tab on your screen. Using that, you can post your questions after the webinar. And yeah, so let's get started with a quick disclaimer first, that the idea behind this webinar is to share the insight. It's not a trading or investment recommendation. So before making any decision based on the insight shared, please check with your financial advisor. Now, talking about the key indices first. So last week, it was a week of consolidation. This week, initially, indications were favorable. Both Nifty and Sensex inched higher, but the last two trading session, trimmed the gain. So finally, we have ended with marginal gains of roughly around 0.5% on both, Nifty and the Sensex. If you see the sectoral performance also, IT, energy, FMCG, and metals, they were the sectoral indices which ended in the green. At the same time, realty, media, pharma, banking, and financial services, they were the one which were on the back foot and witnessing profit taking throughout the week. So in line with the tone, you'll see the first name from the IT pack, mid-cap IT name, Tech Mahindra, a very strong, phenomenal move last week, roughly around 11% kind of a gains, followed by the energy major, ONGC. And then we have UPL, Apollo Hospital, and ITC from various other sectors. When it comes to loser, Adani Enterprises, and then followed by two banks, IndusInd Bank, SBI on the losing side, and two life insurance name wherein we are again seeing profit taking or decline continuing, HDFC Life and SBI Life. So this is how the market performed in the last week. Means marginally positive when it comes to the key indices, but overall, if you see that participation was limited, only a handful of performers when it comes to sectoral pack also. But on the stock specific front, yes, there were opportunities both on positive and negative side. Now, what to expect next? So last week we were here, a very indecisive candle, a doji candle, which we use a technical term. So this week also, if you see that, it's somehow similar to what we have formed the last week. So what it indicates is that at higher levels, so if you remember that last time when we discussed about the Nifty performance and expected outlook, so 17,100, 17,650, that was the zone we were discussing. And we shared that above 17,900, 18,200 could be the area Nifty could test. So we have surpassed 17,900 last week. We've inched towards 17,130, 140 area. But after that, in the last two trading session, we have again retraced to around 17,900 mark. It's a kind of a like tussle, that we are seeing in the index. But having said that, the tone still looks positive, in the key index, considering that we are holding above 17,900 mark. Below 17,900, again, the tone is going to change to sideways to negative. But as of now, the way we have managed to hold this level on the weekly basis, this is positive. But at the same time, we are seeing very restricted participation. So last week, if you exclude like 3-4 names from the list, Reliance, L&T, ITC, then the scenario could have been different. Means the market might be struggling around 17,800 or maybe lower. So only the select few index majors which help the index to hold higher, alongside with some of the IT majors like Infosys and TCS. So like 5-6 names basically which help the index to inch higher. But in the last a couple of sessions, some of the profit taking in those names have trimmed the gains. So it's a very narrow participation that we are seeing. On the broader front also, we'll discuss when we're going to talk about the stocks, but this is what the structure is. So if you talk about within the Nifty 50 basket, I'll just give you a reference so that you will get this point clearly. Still, roughly around 20-25 stocks are still below the long-term averages within the Nifty 50 basket. So almost half, they are still below the long-term averages. What it indicates is that they are still struggling for positive trend. But despite that, negativity in the overall basket, we are seeing gradual recovery. So it means certain pockets are, doing well, and in fact, they are, in fact, catching up with the. In fact, they are adding to the gains, just to eliminate the negativity which we are seeing in the other stocks. So this is the scenario that currently we are in when it comes to Nifty 50 basket. What we are anticipating next week, so it's very important that 17,900 should hold. Next, earlier we were talking about 17,650, the support had slightly shifted on the upward side, both first and second support. So earlier we were saying like 17,400. So we have shifted that support to 17,450. That's the area basically where we had the consolidation closure to this mark, this lows, and then 17,700, the recent swing low. So these are the two critical pivot which Nifty is going to take support in case if the profit taking extend further. Upside, the levels remain same because we couldn't cross 18,200. So 18,200 to 18,350. That would remain the higher band for the index. Now, coming to the banking index, the major culprit basically because of that, we are seeing this profit taking in the last couple of trading sessions. 41,900 last week we talked about being the key hurdle. So it made an attempt yesterday to cross that level intraday, but it couldn't sustain. And again, by the end of this, week, we are again closer to 41,000. So 41,900, that continues to be the key hurdle for the banking index. So while we are saying that the tone could be slightly positive to, sideways in the Nifty index, at the same time, we are saying that the banking is likely to remain on the negative side. And still market holding, because that certain stocks like from the energy basket, Reliance, from the FMCG basket like ITC, L&T from the capital goods space, TCS, Infosys from the IT space, that pack is basically helping the index to hold when the banking is slightly on the back foot. So next week also, the way the banking index have closed, it indicates that negativity may continue. So in banking, we are not anticipating, any major respite, because we have breached 41,100 level, which was the support, immediate support. So now we are eyeing 40,600 to 39,800 as the major support area. So it's not that it's completely turned bearish, outrightly, but yes, the tone is likely to remain negative in the banking index is what charts are indicating. In case if it recovers before 41,900, which is the uh, ultimate resistance for the index, 41,600 is also going to act as the immediate target. So unlike Nifty, the tone is likely to remain negative when it comes to the banking index. Now, how we should approach markets in a scenario like this, wherein we have mixed indication, the Nifty index is indicating there could be a possibility of positive up move because of a handful of the index majors. At the same time, the banking index is indicating negativity. So how we should approach the market overall? So on stock specific front also, if you see that the broader indices, they are also not participating in the move yet. So if you exclude a couple of sessions, mostly the market width was almost flat to slightly on the negative side. So we are referring to the mid cap and small cap majors here. So considering the scenario, we feel that in case if you're going to attempt breakouts, like stocks which are witnessing breakouts, chances of failure could be higher in a market like this, wherein we are seeing mixed trend and very limited participation. So how the best thing that a trader can do is to look for buying opportunity wherein we have seen decent consolidation after a retracement. Means stocks which are currently moderate, the tone is positive overall, but they are not seeing excessive action as of now. So first stocks which looks strong to us in that category is Exide Industries. So Exide Industry, if you see that this long corrective phase, lasted for like several years, then this breakout, and from last 1 or 2 months, we are seeing this very narrow range kind of a consolidation band forming. So we have long-term averages here, we have the trendline support here. Everything indicates that this zone is a very strong support area, closer to around 168 to 170. It's a very strong support area. It's currently quoting at 180. So the risk to reward is favorable. It might not move the next week itself, but here in a market like this, wherein we are not seeing clarity on how the market is going to pan out next week, stock selection, accumulation of the right stock is going to be the game changer for traders. So we feel that in a market like this, stocks which are witnessing pause or consolidation after the breakout are the ideal candidate instead of stocks which are witnessing breakout. So Exide could be the first name which should be on your list when it comes to long trade. Next on the list, Havells India. So this stock also we have selected in same criteria. You can see this broader range consolidation in this stock. It's respecting these trend lines. So it's a kind of symmetrical triangle formation that's currently trading in. Off late, we're seeing the penetration of the lower band for brief when it comes to the weekly chart, but immediately it recovered and it's gradually inching higher. So Havells is giving you opportunity to accumulate, considering the past trend, considering the overall buoyancy of the stock on the long-term charts. This consolidation zone definitely is an ideal buying opportunity in case if your view is medium to long term. In fact, in short term also we can see decent up move in the stock, provided there is no major change in the market scenario. Means the Nifty should hold this 17,800, 900 zone, then these kind of stocks will definitely perform. Now, what if the market fails to hold 17,900 or inch drift further lower? We should have certain stocks on the short side also. So HDFC Life, you can see this, the stock was under consolidation, witnessed a breakout before it failed and then a breakdown. And this time after the breakdown, it tried to penetrate that zone, but it couldn't. So this zone closer to around 520.25 is acting as a strong resistance, and it looks like that this negativity which we are seeing post-budget in the life insurance counter, it may continue at least in the near future. So keeping in mind the scenario, this could be the one stock which one can look at for the shorting opportunity. And last on the list, Shriram Finance. So this stock is also, not offering any clear clues where it's heading next. But yes, the kind of pressure that we are seeing in banking financials, there could be a possibility of a breakdown. So broadly, it's in a trading triangle pattern, and currently trading around the lower band of the same. So breakdown below 1200 would confirm this pattern witnessing a breakdown and confirmation, and closer to around 1100 could be the area where we have the long-term support, which may act as an immediate support for the stock. So indications are, as of now, is negative. To negate this bearish tone, obviously this upper band, which is closer to around 1350, it should surpass that zone and hold it decisively. So which seems unlikely considering the kind of pressure that we are seeing in the banking and financial stocks. So it's not that all the banking and financials are under pressure, but yes, majority we are seeing a similar tone, be it the private banking majors and in fact some of the non-banking financial names as well. So just to conclude, when it comes to Nifty, the tone has not turned in negative yet. 17,900 we are still holding. Certain index majors, barring banking and financial, they are still helping the index to hold, especially Reliance, ITC, Infosys, TCS, L&T. These are some of the names which are holding strong. At the same time, the negativity in the banking and financial pack is weighing on the sentiments. We are seeing profit taking at the higher levels. So we expect that Nifty could consolidate, will continue to find opportunity on both sides of the market. So accordingly, one should plan their trades. Banking looks comparatively weaker. One should look for shorting opportunities on rise until we see a decisive close above 41,900 levels. On stock specific front, we talked about not to go ahead with the stocks which are witnessing breakout. Look for opportunities wherein we are seeing dormancy after a breakout. So stocks which are consolidating in a range. So Exide, Havels, they are the two names which looks positive to us. At the same time, HDFC Life and Shriram Finance. These are the two names which may offer you shorting opportunity in the next week. So this is all from the presentation part, and now we'll have a quick poll. So please fill your feedback, and then we can start with the Q&A session. In case if you have any question, you can start putting your question in the chat box. कोई भी सवाल है आपका, you can start posting your question in the Q&A tab using that Q&A tab. But please restrict your questions to the general market, not individual stock specific queries, because I understand the kind of pain that traders might be facing due to this lackluster move wherein we are seeing very limited participation. But the idea behind this webinar is to share the general market insight, not the individual stock specific queries. Please quickly fill this feedback so that we can start with the Q&A. And once you are done with the feedback, you can start posting your question using that Q&A tab. All right, let's get started. So the first question is from Rakesh on the IT sector. So IT as a sector, Rakesh, in fact, we were discussing this, that last week, IT and just because that ONGC and Reliance had decent weightage in the index, energy also participated and helped the index to hold. But I feel as a sector, if I have to choose, I'll still continue with IT as a sector. wherein I see potential. And why I'm saying this, because earlier it was very limited participation, like a couple of names from the IT majors like Infosys, TCS, which were participating. Yes, HCL Tech was also leading the pack. But when it comes to the mid-cap ID names, only Persistent and Coforge, where we were seeing traction. But now Emphasis, LTIS, FSL, several names have done well in the recent past. Plus, we have been kept on sharing this that we somehow mirror the US market tech heavy index, Nasdaq Composite, especially when it comes to the IT pack. So that indicates that the positive tone is likely to continue with some consolidation. So that is what we are seeing in the IT pack also. Like on every rebound or surge, we see some profit taking in the IT majors, but it is okay. Means we are not going to see any major decline, is what charts are indicating when it comes to the IT pack and the IT majors. So IT as a sector, I feel it's definitely a buy on dip sector and stocks which you can look at. Okay, any other sectors apart from IT which look positive? So yes, see, as a sector, if I say that FMCG, wherein we are just seeing consolidation, we are just seeing pause. Because if you see, ITC is doing well, it's trading at the record high, and it has considerable weightage in the FMCG pack. But at the same time, Colgate Palmolive, Dabur, they are slightly on the back foot. HUL is also witnessing some profit taking. So it's not the broader participation as a sector, but yes, we feel that selective stocks from the FMCG, IT, in fact, this correction in the banking and financial is offering opportunity to accumulate. So it's not that the tone has turned negative for the sector, from the medium-term perspective. It's just a normal profit taking that we are seeing in the banking and financial space. Selectively, we still can look for buying opportunities within the banking and financial space also during this correction. So these are some of the sectors which one can look at while the index is witnessing consolidation. So Prem, this is what we have already answered. Your question is around the banking names. So I've anyway shared that the tone has not turned a negative completely, means that trend has not reversed. It's just that we are seeing consolidation. So in consolidation, it's very difficult to time, when this stock is going to turn until you have, a clear guide with you. So if you're associated with us, you can send your queries to your branches or your related business partner. They'll share you the levels which one should look at when it comes to specific. But broadly, as a banking as a sector, we feel this correction is offering an opportunity to accumulate, especially the private banking names and select PSUs also, like SBI, which always remains the preferred name. But in the short term, overall, I feel this pressure may continue. So accumulate gradually. Don't rush into buying into the banking space just because it witnesses a bounce for a day or two. I feel that this tone is likely to remain for quite some time until we decisively reclaim 41,900 mark in the banking index. Please restrict your questions to the sectors and the key indices that we are discussing. No individual stock specific queries, please. Okay, so how we are seeing the global market positioning. So we closely track the US market, so that we always share, during the presentation also. And on the global front, we are not seeing any major challenges as such. So in fact, this recent dip in the banking space is something which is unusual, because if you see the results, from the banking majors, they were not disappointing. So I feel it's just a normal phase that we are in, wherein we are seeing muted participation, in the select index majors. The market might be like, waiting for some trigger, though there is no major event ahead. So it's kind of a phase wherein one should look at accumulating quality stock. And I doubt there'll be any negative surprise, especially from the global front, in the weeks to come, is what the indications are. Okay, next we have for chemical and oil sector. So oil, we were discussing that if you segregate, the refiners are doing well, Reliance, ONGCs. At the same time, the distribution pack is witnessing pressure. In fact, select names are doing well from that front also. Like from the OMC basket, IOC is holding strong. It's gradually inching higher. While Hind Petro, BPCL, they're slightly on a back foot now. So Reliance, being the index major, being the key component of the energy basket also, we feel that after this recent rebound, the upside seems capped. So we might not see any major move in Reliance. But yes, some of the names like ONGC, Oil India, IOC, they'll continue to do well. So one can selectively look at these names from the oil basket. Chemical as a sector, we are not seeing any major, recovery or a rebound or sustained up move, at least in the near future. So there is no indication whatsoever. But yes, selectively, some of the names are doing well post numbers. But as a sector, I'm not seeing anything meaningful, at current levels. Okay, next on the auto sector. So auto sector, yes, I missed auto sector, during my commentary, but I feel that auto also as a sector should do well. And why I'm saying this, because this week also, if you see the price movement, be it M&M, TVS, Maruti, Tata Motors, Bajaj Auto, so mostly were largely in line with the market tone. They were participating when the markets were going up. So this is something which is very important for any other sector, any sector to do well. So I feel that auto will continue to do well selectively again, because we have seen like stock like Hero MotoCo, which those witnessing some rebound, but the tone is negative. Then we have Tata Motors also like struggling in a range. So selectively, the top four names, if I may say that M&M, Maruti, TVS, Escorts, they are the top for 4-5 performers, which looks very strong to us. Okay, so Benjamin has this query on this hospitality sector, considering that we are entering into the summers and there could be a rush for holidays. So anyways, these stocks are doing well, Benjamin. And if you talk about the top names from the hotel industry, so I personally just, see how the Indian hotel is performing. The rest of the stock, I usually don't track. So Indian hotel is doing well. It's trading around the record highs, and I feel this tone is likely to continue. But since we are not seeing broader markets doing exceptionally well, so anticipating any very substantial move, up move or down move in the near future, that seems unlikely. So comparatively, yes, you can look for accumulating these stocks, during this phase, but near term they might not perform well. Okay. So we have largely answered all the queries. So thank you everyone for joining in. And next week is going to be the expiry week, monthly expiry week. So my colleague is going to join and talk about how the monthly rollover has, panned out. So for that, same time next week, please connect.